This is my market dashboard in cryptocurrency markets. A cryptocurrency is a digital or virtual currency that is meant to be a medium of exchange. It is quite similar to real world currency, except it does not have any physical embodiment and it uses cryptography to work. There are different opportunities in cryptocurrency markets, such as spot trading, futures trading, arbitrage trading, and staking. Let me show you the way they work. Okay, this is my Binance crypto account. Let's go to spot trading and click on wallet. Then click on fiat and spot. And these are different cryptocurrency you can buy. In spot trading, you buy the cryptocurrency assets and expect the price to rise. For example, let's take AC Milan coin. If you want to buy or invest in AC Milan coin, click on trade. Then take AC Milan USDT. So this market is AC Milan USDT market. Look at it, ACM USDT. This is the current price for AC Milan coin, 2.825. And this is the market trend. If I want to invest in AC Milan coin, this is the buy button and this is the sell button. What I need to do is to type how many dollars I want to invest in AC Milan coin. For example, $20. When I click on buy, the order goes through. The money will be on AC Milan coin. As AC Milan coin start to rise, that is when I will make profits. But right now, the AC Milan coin is trending down, it's dropping. I'm not making profit for now, neither I'm losing. So if I want to close the trade or I want to sell AC Milan coin off, I'll click on sell. So when I click on sell, the money will drop back to USDT, which is the stable coin. This is how the spot market works. In spot markets, you only make profit when the market rise and lose when the market drop. Let's go to futures trading. Click on derivative. Take USDM futures. Here is the futures markets, and the cryptocurrency pair that we're about trading is BTC USDT. And there are other cryptocurrency pairs you can trade in the futures markets. These are other cryptocurrency pairs you can trade in the futures markets. We have two buttons. We have the buy button and the sell button. And this is the current market price of BTC. In futures trading, you make profit from the two ways, either buy markets or sell markets, provided you take the right direction. If you click the buy button in futures trading, that means you are in support of uptrend. And if you click the sell button in futures markets, that means you're in support of downtrend, the bear markets. If you click the sell button and the cryptocurrency price happen to drop for the day or for the week, you make profits. The more the cryptocurrency price drop, the more profit you make. If you click the buy button and the cryptocurrency price rise, you make profits. The more the cryptocurrency price rise, the more profit you make. So in futures trading, you make profit from the two ways, either the bear markets or the bull markets. But in spot trading, you only make profits when the cryptocurrency price rise. And when the cryptocurrency market drop in spot trading, you lose. But here in futures, you make profit from the drop in price in cryptocurrency and the rise in price in cryptocurrency. Okay, let's look at arbitrage trading. Arbitrage simply means buy low and sell high. And there are different kind of arbitrage trading. We have exchange to exchange arbitrage, we have triangular arbitrage, and so many others. A exchange to exchange arbitrage is this: where you buy a cryptocurrency at a low price from an exchange and sell it at a high price in another exchange. That is called exchange to exchange arbitrage. For example, you buy BNB from Binance Exchange at a certain price and take it to Big True and sell it at a higher price. So that is called exchange to exchange arbitrage. Triangular arbitrage is when you buy a crypto asset from an exchange at a low price and sell it at a higher price in the same exchange. Such is known as triangular arbitrage. For example, you buy BNB at a lower price from Binance Exchange and sell BNB at a higher price in the same Binance Exchange. So that is known as triangular arbitrage. Let's go to staking or earn. Come to earn. Take simple earn. Here in cryptocurrency is a form of contracts. You can enter 30 days contracts, 60 days contracts, 90 days contract, and 121 days contracts, even 21 days contracts for different crypto assets. These are different crypto assets. You can go into contracts. For SOL, the annual percentage yield is 11.9% for 21 days contracts. For 30 days contracts is 5.86%. For 60 days contracts is 6.7%. For 90 days contracts is 7.2%. For 120 days contracts is 7.99%. For hours, the annual percentage yield is 23.79% for 21 days contracts. For 30 days contracts, it's 6.39%. For 60 days contracts, it's 7.79%. For 90 days contracts, for 9.8%. For 120 days contracts, for 10.9%. For APE, the annual percentage yield is 121% for 120 days contracts. For 60 days contracts, is 76.9%. For 30 days contracts, is 61.9%. For 10 days contracts, is 21.9%. Here, you don't trade the cryptocurrency assets. You only go into contracts. So when the contract dates mature, both the interest and capital will draw back to your wallets. Whether the cryptocurrency rise and fall, it has nothing to do with your contracts.